Hey, welcome everybody. This is the Options Moneymaker Q&A session for January 22nd. It's 7 p.m. Eastern. I'm Mark Dannenberg, and I have Michael Kastner with me here tonight. Hey, Michael.
Hey, Mark.
Aaron Rumley is going to be away this evening, so Michael and I are going to take care of you. If this is your first time attending one of our Q&As, welcome. Thank you for being here. We really appreciate that. We set aside time every other Wednesday to make ourselves available to answer questions that you may have about whatever program or service you may be participating in, or if you're brand new to Options Moneymaker, maybe you aren't involved in any of our programs, you might have questions about what we can do to help you. Some of the topics that we discuss on a frequent basis are the profit flow analytics charts by New Cycle Trading and Analytics. That's what we've adopted as our primary go-to method for analyzing market cycles and trends, and using that to time the entry of our positions. More recently, the masterclass, which is actually underway. We've completed 3 sessions of a 4-session masterclass, which is all revolving around the profit flow analytics and including the new Cycle Finder Plus indicator, which is just really turning out to be a extremely powerful, beneficial indicator for both short-term trading, mostly around futures trading, and also longer-term trading, which we talked about quite a bit today in our live trading room session, where we're looking at longer-term charts, daily charts, using Cycle Finder Plus to time the entry of positions. In fact, we took some daily crosses today of the Cycle Finder Plus. We also will sometimes have questions, more in-depth questions regarding the live trading room, which is our real-time trading support for our trading community. We try to answer as many questions as possible. Michael and Aaron in particular are very good about responding to questions in the live trading room, but sometimes we're more focused on trading and we don't have time to answer some in-depth questions that some of our attendees have. So this is a great forum for doing that. If you're brand new to trading, if you're brand new to options trading in particular, we have the Profit Builder Plus program for options education. And then we also have a futures trading education program for learning the risk and reward of futures. Futures are frequently categorized as something that is a high risk trading vehicle, but it's really all a matter of learning how to mitigate your risk, how to manage your risk, and we've been focusing quite a bit on that more recently in the live trading room, as well as the master class, which, as I mentioned, we've completed 3 of our 4 sessions. And then if you have questions about any type of one-on-one coaching, I do have a small number of slots available to take on some new one-on-one coaching clients. This is all about an intensive immersion in learning how to trade. And we walk through a variety of things, all of the programs, all of the things that will help you achieve what you want to achieve in your trading. So that's really what this session is all about. I'm going to open it up to questions at this point and see where we want to start. Hey, Michael.
Yes, sir.
There was some interesting trading today. We went through some long periods where the indexes were fairly flat, and I know at one point I was pointing out to you in the room that the NASDAQ 100 futures were trading in, what, a 6-point range for about a half hour, 45 minutes?
Yeah, I think so. Yes, I remember that.
That's a pretty tight range.
Absolutely. It is.
Gerard, nothing yet on that. We are working on that, and certainly we'll be in touch with you. You can be assured that we are working on that.
Okay, folks, I don't want to hear myself breathe, so somebody ask me questions.
Well, so while we're waiting for questions, so what we focused on today in the live trading room is reinforcing what we taught in the last 3 sessions, well, the first 3 sessions of the masterclass. So the first session, if you're not a participant, was all focused on a new tool that we built for our trading community, which is the profit flow, the profit sweet spot matrix. So the profit sweet spot matrix allows you to start with some preloaded historical trade information on 4 stocks and 2 indexes. So we have coded in there historical trade information on Amazon, Booking, that's the old Priceline.com, Tesla, Google, and then 2 indexes, NDX and SPX. CMG is one that I'm evaluating right now and may actually load in there, but not committing to that just yet. I'm still in the process of evaluating it. But these 4 stocks and 2 indexes, we have a year's worth of data coded in there. I'm actually continuing on my own personal copy to update starting the new year, 2020. And what this helps us determine, for those of you not familiar with it, is so we have a lot of data in terms of the cycles, long cycles followed by short cycles followed by long cycles. This is all based on a daily chart, and it's all making use of the new cycle trading and analytics indicator, the Cycle Finder Plus. So we're looking for crossovers on the Cycle Finder Plus on a daily chart. Some things you have to learn about in terms of taking those trades. But once we are in a trade, and I took trades today, I took a trade on SPX, and then we have the ability very, very simply with all of this data to actually choose what our desired percentage win rate is. Now, I don't know of another tool out there that other services are offering that actually allow you to kind of pinpoint your win-loss percentage based on this data. I'm not saying it doesn't exist, it's just I'm saying I'm not aware of it, not familiar with it. But in our tool, the PSSM, it's the Profit Sweet Spot Matrix, we actually can input our desired return, our desired win rate. So when I allow my tool to look back historically and evaluate what number, what amount of movement would SPX achieve 70% of the time, because that's what I have coded in here. Well, 70% of the time when we have a signal, SPX is going to move 18 points or more. So my sweet spot becomes 18 points. If I decided I wanted to be a little bit more conservative, I say I want an 80% win rate. My sweet spot is 13 points. That feature right there makes it so very, very simple. And so I'll tell you exactly, if you weren't in the live trading room today or you weren't following along or you're not familiar with this, I want to tell you exactly what the sequence was. We identified a signal. We identified a signal on our chart. Actually, I got to put this on SPX. So we saw a cross to the downside. This is what we define as a cross on the Cycle Finder Plus. That happened at the beginning of the market day. And so that tells me that I want to buy to open a put. So the next thing I do is I look at my sweet spot matrix and go, well, the average cycle time is 5 days. And that number will continue to change the more data we load in here. But right now, it's on a look back period, it's based on 5 days. That's the average cycle time. And the longest cycle time is 18 days. So I'm going to base my expiration on that 5 days. I want to be out beyond that 5 days. And we've taught in the master class some guidelines to use around that average cycle time that is a good rule of thumb. So I know I'm going to go out to an expiration that will meet the rules that we taught in the master class. And once I have the position open, then I'm going to look at my sweet spot. And this is an estimate of how much the underlying stock is going to move, stock or index in this case. If I want to achieve an 80% win rate, then I have a 13-point sweet spot, meaning I anticipate that 80% of the time SPX will move at least 13 points. So I can take that 13-point sweet spot, I can look at the delta of my option, whether it's a 10 delta, a 50 delta, a 40 delta, whatever it is. Let's say it was a 40 delta. I can look at the sweet spot, anticipated move of 13 points, times a 40 delta. I know that my anticipated profit target is $5.20. So then I just have to take the cost of my option, add $5.20 to it, place a good till canceled order to close the position, and then I'm done for the day. I'm done for the day with that position. There's no other action I need to take. So that's a really that's a really fantastic, simple, powerful way for anybody to trade who doesn't have a lot of time. You're looking at the beginning of the day. So we taught all of this plus intraday trading, taught how to use, that's just one small feature of the Profit Sweet Spot Matrix. We've taught how to use the Sweet Spot Matrix, and we give access to the Sweet Spot Matrix as a masterclass attendee. And you get access to the Cycle Finder Plus indicator as a masterclass attendee. So that's how it works. So we identified the signal off the Cycle Finder Plus. We know we're buying a put. We go out and we choose an expiration based on our average cycle time. We open the position. We set our desired percentage win rate, whatever you decide that might be. I've got mine set at 80%, 13-point movement. Actually, I'm sorry. I actually had it set at 70% for that position. 18-point movement that we anticipate. I'm looking for a profit based on the 18 points multiplied times the delta, the actual delta of my position. I put a get to canceled order in, and then I just wait. I wait for the position to hit my GTC or for a reversal, which means I would actually sell to close the put and buy to open a call. So that's kind of an overview of one feature of the masterclass, and we focused on that today. I actually opened a position on SPX today, and I opened a position on Google today. Same thing, we had a cross to the downside. 80% win rate is an 11-point sweet spot on Google. Same, happens to be the same average cycle time of 5 days. So I chose my expiration according to that and set my good till canceled order based on 11 points of anticipated movement times the delta of my position. In the case of Google, I think I had a 41 delta. So I'm looking for around $4.50 a profit on that. And the number of contracts that I would trade would all be based on my capital commitment, how much risk I'm willing to put out there. And there's a whole nother tool that we've created several months ago called the Personal Trading Plan, which makes that whole process of planning my capital commitments and tracking the growth of the account very, very simple. So,
Mark's asking what are cells F9 and H9?
Cells F9. Oh, so these are totals. These are totals, Mark. So on the entire look back period since January 2019, in this case of Google, the 684 is saying that if you held every position until its natural reversal, so if you bought a put on a cross down and you held that put until the Cycle Finder Plus crossed up, you would have accumulated over the course of that time since January 1st of 2019, 684 points of profit. The 474 is based on the sweet spot. So if you had used an 80% win rate and you had an 11-point sweet spot, you would have accumulated 474 points. So let me kind of magnify that a little bit. If you look at NDX, for example, the total accumulated points of profit since January of 2019 would be 3,786 points. If you used an 80% win rate, you would have accumulated 1,773 points of profit. Now, 2,000 points more seems pretty darn attractive, but here's the thing you have to have eyes wide open when you decide to hold for the reversal. You've got to have a very strong emotional stamina and be very wise about managing your capital. So I'm just going to go back to January of last year. The first 3 trades, holding for the full reversal, the first 3 trades would have been losses of 175 points, 60 points, and another 145 points. Well, you know, frankly, I don't know if you can withstand that emotional challenge right there of having all of your trades right up until through January 29th, first 3 trades, basically losing almost 400 points for you. That's really challenging. Whereas if you were using the sweet spot, all 3 of those trades were winning trades, capturing a 44-point move. So we just put the number up there. We are not deciding for you which method you should trade, but I will just say holding for the reversal overall is a much bigger return, but you're going to have some periods of time. Remember, you're slugging these out 1 trade at a time every day throughout the year. And do you have the stamina, both emotionally and financially, to withstand the big drawdowns, especially the sequential drawdowns that will happen throughout the year? Yeah, it's nice to look back over almost 13 months and go, well, I'd love to have 3,700 points of profit, but do you want to live through that each day, 1 day at a time, or would you be more happy with something that's a little more stable? There's a balance here too, Mark. You could say, listen, I'll take a 60% win rate. I can scan down through here my wins and losses. I can see that out of 69 trades, I had 48 wins, 70% wins overall, 20 losses. Maybe that's a little more manageable for you, and that is 2,300 points of profit, not quite the 3,700, but that's why we've built this tool the way we have. It gives you complete flexibility to pick and choose your own goal based on your personal risk tolerance. That's right, Mark. Mark says he already spends enough on Tums.
Let's see. David's asking if Google still shows a cross down the morning and pre-market doesn't show upward trend, do you feel that getting into a put would be a good trade?
So all of our research and all of the data in the PSSM, David, is based on taking the trade on the day that the signal presented itself. So today, Google showed a cross. Now, what you're asking about is, can I jump in when the cycle has already started to move? And the answer is yes, but that's what we're actually going to be talking about and teaching in the masterclass session 4 tomorrow evening. So why don't you hold off? My counsel would be hold off on opening Google. There's a different way to look at the pattern and the time frames if you decide that you want to jump in after the signal already presented itself.
Okay, Michael, let's see. Okay, I was not able to attend the pre-market session today. I'll try to attend tomorrow. So my question might be answered tomorrow. How do you check pre-market direction for individual stocks? What do you look at?
So Michael and I are working together on this. We did so this morning, and we're just simply using the CNBC tool, which shows pre-market activity. So if I look at Google in the morning, and Google is, looks like it is in pre-market, based on pre-market, looks like it's opening lower. What I'm going to do is to evaluate my good to canceled order. I'm going to see whether or not the projected open price might exceed my GTC, and I might cancel the GTC and set it at a different number that would be more along the lines of where Google is intended to open. Just one more thought about that, Michael. There was an example on Booking. Look at Booking when this trade came on the 14th of January, and the stock on the 14th of January opened at 2074.60. 2074.60. Now remember, you're buying a put here. Yesterday it traded down to a low of 1963.70. So you went from 2074 to 1963. It's 110 points. If I was still holding booking and I saw in pre-market that it looked like it was about ready to gap down from the prior day close of 2054 to an projected open of 2006, so almost 50 points lower, I would have been canceling my GTC, and I would have been calculating what I think a reasonable projected price of the option is and setting it that way.
Okay, David's asking, the password on the matrix is in the directions, right, Ron? Mark?
Yes.
You're not Ron.
Yeah. No,
Mark,
I'm not.
Okay.
I'm still Mark. It's in the instructions right at the top, David.
Let's see, Joe. Hey guys, it was great to hear the live trading room discussions between you and Michael. Very informative and truly educational. Not to mention the banter. I'm new to attending the live trading room. Is it this way normally, or is it with the two of you just thinking through trades such as educational fashion? It's truly a mentoring. I really appreciate that.
Yeah, so Joe, our intention is to have dialogue in the room. Sometimes it's the three of us, Michael, Aaron, and me. More frequently, recently, it's been Michael and Aaron. Sometimes it's just two of us. But the idea is that we're having conversation about the trades. We're discussing the setups of the signals. And that discussion is intended both to have us kind of confirm and check with each other what's going on. And today, Michael and I were scanning 3 different indexes all day, and it's really helpful to have 2 of us doing that. But the idea is to have a discussion that is intended to be instructional for you. So we're trying to share with you, we want to share with you a thought process that we have. So, as an example, there were a couple of situations today where we were looking at all 3 indexes, NQ, RTY, and ES, and all 3 of them had the same coordinated alignment between the 3 and the 10. So then we would discuss which one seemed to be a stronger signal. So if you're attending the masterclass and you understand what an alignment is, we might have one of the indexes where the 10-minute was pointing lower down into the buy zone, and we might have another index where the 10-minute is in the buy zone but crossed up. To me, the cross up is a stronger signal. So if you only want to take one of the indexes, one of the trades, even though all 3 of them might be presenting an entry at the same time, you can listen in to our discussion, and you're going to hear and understand a little bit more about how to filter through and prioritize one index over another.
Okay, let's see, I got that together. Jeff, I have to watch yesterday's masterclass, but if you want to back test a stock, how do you determine the entry? My question isn't on the profit cycle plus cycling, but if the cross happens, were you using that day or the opening of the next day?
Yeah, so you need to go back and listen to the recordings of the masterclass, but for the daily crosses, we're taking the trade as it opens that day. So if we get a cross right at the beginning of the day, today Google happened right at the open of the day. I think I can go all the way back here. Well, there were a lot of alerts today, Michael.
Yeah, I know. I'm asleep with them in my head all night. Could change that sound somehow.
Yeah. I guess it doesn't go back far enough for me. But anyway, Google happened right at 9:30, right at the open of the day. SPX and NDX both crossed within 15, 16 seconds after the open of the day, those to me are qualified trades. They opened at the beginning of the day, lower with a cross. So I'm looking at that, and the price that I'm using is the open of the day. I mean, that's what's allowing us to take the trade. So Google, for example, today crossed down right at 9:30, and the opening of the bar at 9:30 was 1491. So I'm looking at pre-market to anticipate which stocks or indexes might actually present a cross to me. And if I'm identifying a potential cross, I'm already choosing my expiration based on the PSSM, and I'm narrowing down the strike that I probably want to trade. So I have all of that prepped and ready to go, and when it opens and crosses down, I'm going ahead and taking the trade. Now, before you ask, anyone ask and get concerned, well, you know, it takes me a minute or two maybe to open my options trade. Haven't I already missed the opportunity? Absolutely not. There are so many of these crosses where it opens and it stays flat for a little bit, or in Google's case, it actually reversed against me. And I opened my trade pretty darn close to the open of the market because I was prepared for it. And then it reversed on me, and my option was actually down about $2, but at the end of the day, it closed up $2 of profit. Hasn't hit my sweet spot target exit yet, but you know, I'm holding overnight. So when you're doing your research, you're taking the open of the bar on the day that the cross occurs.
Todd's asking, were there any valid signals that presented yesterday afternoon that suggested an overnight trade that would have been profitable in the opening into the first hour this morning?
Well, using the daily, Todd, we're not looking at midday signals. So we're generally not using the daily chart other than for the open of the day. Now we're going to be talking in session 4 tomorrow about some intraday patterns which could possibly set us up for a hold overnight. I like those patterns too, and we're going to be getting into that more.
Joe's asking, I'm trading options right now. Can I use the futures entries to enter option trades on the NASDAQ, Russell, and the SPX? Do they correlate or they lag?
I would say there's a reasonable correlation, but it's so simple to have multiple charts open on different tabs. If you are on a NQ tab and you see a signal that you're thinking you want to take, but you'd rather take it as an NDX option, what I would do is I would have the same time period, whatever time period you're evaluating, open on an NDX tab, and I would just quickly toggle over there and just confirm that the signal looks the same, that it's something you still feel comfortable taking. Sometimes the futures, especially earlier in the day, the futures and the cash index charts are not in sync, and part of that's because the look back period on the futures is capturing all the overnight activity. The look back period on the cash index is not capturing that. But there's no reason you can't use it as a guide, but I would just have another tab open for NDX and just do a real quick toggle over there, make sure everything lines up before you take your trade.
Mark, Mark had a comment, which I don't know if a lot of people realize it, but when we're in the room, we're actually trading our live account. So we do trade that. We'd also teach, but we also do trade our live account also. So
yeah, that's a good point. When I was trading all 3 indexes today, I was trading live account. So you know, I've got winning trades, I've got losing trades. Overall, you know, it was a really nice, strong winning day for me. Although I had a couple of trades that just got frustrating, and you've got to be patient and disciplined in following your signals. I just followed the signals today. Michael was great about calling out signals on indexes I might not be focused on. and you just have to be diligent. Like I said, I had a nice, strong winning day today. Very happy with my day, but I had a couple of trades in there that they were losing trades because the signal came on, the price didn't move enough, and then the signal reversed. And so you've got to take the trade off. You can't second guess and hold and hope. You don't want to hold and hope. That's not a strategy. Holding and hoping is an emotional pleading with the market, making deals with the market. If you give me this one, I'll give you this. You don't want to do that. You want to just take the trade off, and then you want to wait for the next opportunity. Let me just see if there's a good example here.
Yeah, I'm sorry, go ahead.
Well, so here, over here, on the 3-minute NQ, here was a cross to the downside. Now that's at 18, that's after regular market hours, but I'm going to just give you this one as an example. Here's a cross to the downside. Now it doesn't have alignment, right? So I wouldn't have actually taken this, but I'm just sharing this with you to emphasize something. On the 3-minute, you have a cross to the downside at 18.15. On the next 3-minute bar, it crosses back up. So you want to take that trade off because it's reversed. You don't want to stay short and just hope and assume and pray that it's going to work out. So at 6:15, I'm short at 91.95.75. At 18, I'm actually out of the trade at the same price. And then at 21, nope, at 24, 18.24, I have a next opportunity to go short, and I'm in at 91.95, and that moved down to 91.77. So you want to follow a discipline of taking your trades off. And in the past, folks, I'll be honest, that's been where I will personally violate my own rules. But the minute you start violating that rule, you're going to get caught on a trade where it's just going to keep running higher. And then when you do get across to the downside, you're so far behind on the trade, it's hard to get caught up. You want to take the trade off. You want to take the loss. It's okay because there is always another trade coming after that that is going to give you an opportunity. So,
and it will probably, and there's no guarantee, but been doing this a long time. If you take it off, it's hard to do that, but I promise you, in the next couple hours, you're going to hit a trade that's going to take care of all that little small losses you had. Not big losses, a couple points here, a couple points there. It's going to make up for it. There's no guarantee in that, but in my world, I've seen that happen most every day.
Well, so yesterday was a good example, Michael. There was a trade early on NQ. If you took the trade and you took it off when the signal reversed, you lost 5 points. If you didn't take the trade off, you lost like 22 points on that trade.
Right.
But if you'd taken it off when you were supposed to, and then you took the next trade, you actually made 5 points. So there was 2 trades early on that netted to 0. And then the third trade gave you 15 points of profit.
That's right.
So this is really about staying in the game and staying disciplined and following the rules and the strategy and just letting the profits and losses come to you naturally. With the Cycle Finder Plus combined with the other profit flow analytics signals, I think you're going to find that your profits far outweigh the losing trades. That's what we have found. And you can, now that I'm talking short term here, but you can go back to the long-term strategy, which we just talked about last night in the masterclass, and you can very simply look at each of these stocks in 2 indexes, 4 stocks and 2 indexes. And on S&P 500, if I want a 70% win rate, since January 2019, if I was trading 3 contracts and I'm trading a 40 delta, I've got a 70% win rate, and I can trade 3 contracts and make $68,000. And that's just taking 69 trades over the course of now nearly, 12 and a half months. So I think that that's that's a very powerful statement, to just take the action that is necessary and don't second guess it.
Well, and something else, Mark, is don't, it's easy to do, but don't take a false sense of security just because it's above, say if it's up there above in the buy zone and it gets all the way to the top. Well, there's no way you're going to stay up there all day. It can. Absolutely it can. You stay up there for hours. On a 3 minute chart, maybe not that way, but I've seen it last 30, 40 minutes on top. And so it's just better to take the trade off when it crosses back over. Be a robot, follow the guidelines.
Absolutely.
I really believe that. And, and speaking about that, I was talking to me and Arizona Mark was talking after dinner tonight that if you'd listened to me at the end of the market today, you would have had a fantastic day. But I'm just going to put that out there. Arizona told me to tell you that. But anyway, just putting it out there, being transparent.
I'm going to miss you, Michael.
Todd said that. Todd said what he meant was using the intraday 5-minute chart, not the daily chart, intraday signal in which one would have a profit and continue it through the next day as if in today.
Oh yeah, there's always opportunities for that, Todd. But the 5-minute, in my opinion, is not the right chart to use for that. We're going to actually be talking about that tomorrow in session 4. What we have determined. Now you can use whatever you want, obviously, and whatever pairing of time frames you want. But we're going to be talking about what we've found to be the optimum time period to be looking for intraday options trades. And some of those trades are trades that you might end up opening late in the day and carry over into the next day. And some of those trades can be significant opportunities when you wake up and you look at your pre-market activity and you see that the stock that you're in has a gap down, much like that booking example that I showed you here, where it gapped down 50 points from the prior day's close to the next day open. You're going to hit a few of those now and then, and you're going to love them because you're going to learn how to adjust your good till canceled order. Until that presents itself, you're going to follow the rules. You're going to follow the sweet spot guidance on the PSSM. And then one day you're going to wake up and go, oh, hey, look, my stock is gap down 50 points. And on stocks like Booking or Amazon, it's actually not unusual for that to happen. I mean, it doesn't happen every day, but you can go back here to Bookings around their earnings date, and the stock closed at what it closed at 2012, and the next day it gapped down to open at 1942. So you've got 70 point gap down. Well, let me tell you, if I have a GTC set on my trade and I'm looking for 5 points of profit based on my sweet spot and my delta, I'm going to be canceling that GTC, and I'm going to be very quickly determining what a reasonable option price is probably going to be at open. And I just took a 50-point move or 70-point move instead of an 11 or 13-point move. And you hit on a few of those, they are just a lot of fun. You're going to have a lot of fun with those when they happen.
Yeah, like 2016, Mark, when we all held overnight on the NASDAQ, and was it 450,000, or am I right on that?
Oh, yeah, that was a lot of fun in the live trading room. It was such an amazing day. We took a poll in the live trading room. How much did everybody make cumulatively? It was almost $500,000 that was taken in profits that day.
Yeah, David just verified that. Yep, he sure did. But yeah, it was. I mean, there's several of us, but we held it overnight, and we knew in the morning what was going to happen. I mean, we didn't know. I mean, when we woke up that morning, we saw we were down just huge, and we took all our GTCs off, and it was unbelievable.
It was just a fun way to trade. It's a bonus. You're trading methodically. Like Michael says, you're acting as a robot. You're trading methodically using your profit sweet spot matrix with whatever your desired percentage win rate is, your sweet spot times your delta. You're trading methodically. But if you didn't get filled on your GTC and it carried overnight and you happen to hit one of those 50 or 70 point gaps in the morning, whether it's up or down, then that's just a bonus. This is your steady state profits. This is your robotic profit. You're not speculating and trying to hold overnight, hoping for a 50, 70, or 100 point move. If it happens naturally, That's just a bonus for you. It's on top of what you would normally be doing based on your sweet spot.
Yeah, David, see, I remember that David said he made 23,000 that week. I can believe it because I was there with you, my friend. That was just something that you talk about till you get, well, I'm already gray, but till you get grayer. Absolutely.
Yeah, that was a fun week. That's true. The platforms were having a hard time keeping up with processing the trades. That can happen. So anyway, in case you can't tell, if you've not attended the masterclass, I'm super excited about the masterclass, what we're teaching, and I think the trifecta of success here is the Cycle Finder Plus as a primary tool, the PSSM, the Profit Sweet Spot Matrix. That tool gives us not only built-in historical analysis on 4 stocks and 2 indexes, but you've got a template here where you can start doing your own research on any stock you want, and you can go back as far as you want. TradingView makes it really easy to do a replay and put the data in your spreadsheet and be able to do the same analysis that we've done on these 4 stocks and 2 indexes on any stock you want. And then you can see the summary on the summary page of anything that you've evaluated. Ignore CMG right now. I've got some data in there. I'm just kind of playing around with it right now. But you can look at a summary, and on a per contract basis, if you're trading on an average, maybe a 40 delta, you've got $30,000 of profit over that period of time on bookings, 18, 22, 70. You can evaluate what your profit potential is. So I just have another column of numbers here, and we have a updated version of the Profit Sweet Spot Matrix that's going to be coming out in the next couple of weeks. We've got some more data in there, and that new version is going to have some other calculations, which is going to show a ratio. I'm going to give you a little preview of it right now. It's not all baked yet, so don't hold me to it. Aaron is our guru of formulas and everything, but what we're going to do is we're going to add some data out here, and this is the only column that you really need to input. So what I do is I go out periodically and update the option price, a reasonable option price, if I went out 2 weeks to expiration. And so I code the option price in there, and this is picking up from each of the individual sheets how many contracts I might decide to trade, and that's the total capital commitment. So I'm also making an assumption that I'm not trading at the money. I'm making an assumption for the basis of this information. I'm assuming a 40 delta. Now you might be higher, you might be lower. That's up to you. This is just to give you a directional bias, but this is the number that I want to look at. If I woke up and I saw that I had, at the open of the market, I had all 6 of my equities giving me a signal to get in, 4 stocks and 2 indexes, I probably don't want to put that much capital in all at one time. So I'm going to refer to this, and this is helping me determine what the profit ratio to capital is. So the best producing equity that we tracked so far is Booking. We've got a 13 profit ratio to capital. So our profit is actually 13 times the capital that it would typically be putting in, all the way down to Tesla being only 4 times. But that's still pretty reasonable, and I might still take that trade. But I think that this is just additional data that's going to be very valuable to you. So we're going to be continuing to create that and build that, and I think in the next couple of weeks we'll have an update for you. And we also hope to have an update that will provide a intraday template. So if you want to go do your own research on NQ, ES, RTY, anything that you trade, futures intraday, using a 3 and 10 minute alignment, you're going to be able to do that. It just requires some additional fields and more information, because we've got time of day for the entry, and we've got some other factors there, but we're in the process of building that. We're going to have that, and we'll probably have it available for you sometime in the next couple of weeks.
Mark Douglas says he's in the master class. How do you get the Profit Sweet Spot Matrix?
So Douglas, when you got the email from Dorothy with a recording of session 1, there was a link in that email to download the Profit Sweet Spot Matrix. So look for the email where you received the recording of session 1, and you should have the link in there. And if you can't find that, didn't get it for some reason, you can email Dorothy.
Mark, Greg's asking, the Google trade cost $29.50. Was it that twice the expenses as your expectation from your spreadsheet?
Let me see. Google is about $15. Yeah, but I traded I traded further out in time than 2 weeks, so I went out in time. So these are not exact, folks. You're going to have to do some of your own updating on this. This is just a directional bias and give you some idea. But I'll update these generally once a week, and I go out 2 weeks. On Google, I was out almost 3 weeks to expiration, and I based that on the average cycle time. But Todd's saying 5 minute was just an example. I use various periods, 1 minute, 3 minute, 5 minute, daily, weekly, as well as tick charts. I'd be interested in hearing your findings. Yeah, well, we'll be talking about what we prefer to use. And again, Todd, if you're very familiar with multiple time periods and you're comfortable trading them, nothing wrong with that at all. What we're going to do in Masterclass Session 4 is guide you to a set of time frames that we feel through our experience and our own personal trading work very well for intraday options trading. And we have a large community of traders. Listen, Michael and I have traded options, intraday options, and same-day expiration options off of 1 minute charts, 3 minute charts. I think for a while we were trading 30-second charts. But at some point, you want to back up and have what I consider to be a reasonable time frame that most anybody, any trader can follow along with. What we're going to teach is what we feel works very well. After that, it falls in a category of individual trader variables, and you can decide to modify it as you choose. Okay, I'll have to talk to Dorothy about that, Arizona. We can talk to Craig at New Cycle Trading. So Michael, what are the futures doing here? We got any good setups?
I don't know. I don't have my charts up. I let them rest at night.
I thought that's all you did.
No.
You traded.
Oh, no.
23 hours a day.
No. You're welcome, Todd.
Right now, NQ is actually setting up for a possible short position because we're up in the sell zone, 10 minutes up in the sell zone also, but we don't have a cross yet. RTY looks identical to that up in the sell zone, and no cross yet. Yes, they all look the same right now. So if I was prioritizing, they all look really identical. They're all, even if I incorporate the 30-minute into the picture, they all look identical. So you got some dice?
Yeah. Dartboard. That's what I use.
Yeah.
I don't see more questions, Mark.
All right. Well, I'll give it just another moment here, see if anybody has any final questions before we close out. Always appreciate all of you being here and not only showing interest in trading, but showing an interest in really learning and advancing your own understanding. We have made it our mission to help either create or identify tools that will help you build the strongest trading business you can. I'm just super thrilled with the New Cycle Trading and Analytics chart, profit flow analytics set of signals, and I'm particularly excited about the Cycle Finder Plus. I'm super excited about the Profit Sweet Spot Matrix, which we at Options Moneymaker created to help you better assess historical data and use that in your decision making. And we haven't talked a lot about this in the masterclass, but I'm really excited about the personal trading plan that's available for each of you as part of your whole planning and tracking and measuring where you are and how your particular run rate of profits and losses, combining profits and losses on a daily basis, is projecting you out into the future. It's just a three-pronged approach to being successful in your trading business.
Greg's asking, when they're identical, what indicator would you look at next? When you're talking about all three of the indexes look the same.
Then I just take the first one that crosses. They generally won't all cross at the same time, but if they did, I don't really have a bias of one over the other. NQ definitely moves more, but it's a $20 a point index. RTY has some really nice rolling cycles to it. It's a $50 a point index. ES tends to move a little more slowly, but it's also a 50 point. So depending on how quickly you want to have to keep up, you might want to take RTY or ES. If you like kind of riding a wild bronco at times, NQ can be a pretty amazing ride.
Barquette just asking, it would be great if Apple data becomes available.
It is available. It is available, Barquette. Right here, your template. You can go back and do all of your research by doing a replay on the daily Apple chart. And you can plug your data in, and there's only 4 fields of data that you need to plug in. It's the date, it's whether it's your short or long, it's the opening price of the bar, and then after that cycle is completed, it's the maximum move for that particular cycle. So that's why we created the template, because some people will want to know what the full historical picture is on Apple or Netflix or ISRG or CMG or Shopify or any one of a number of stocks that you might be interested in following.
Mark Jesbar is asking, can you talk about stops on each index?
You're talking about, hold on, talking about stops on futures. So what I do now that we have Cycle Finder Plus and have completed the full set of indicators, I set my stop out quite a ways, and that's just to have a protection against some sort of a completely unexpected impulse move. So I just set it out quite a ways. It really doesn't matter. But what then I do once I'm in the trade is I assess the pattern, and as long as the chart is telling me I should stay in the trade, I don't really want to tighten up my stop too much. But when I decide that I'm ready to actually put in a stop that is based on the chart, and let me just pause there for a minute, because a lot of stop placement by traders is not at all based on the chart. And we've done this in the past too. It's when you open NQ and you have a fixed stop of 5 points or a fixed stop of 10 points. That is not a stop that is based on the chart pattern. That is a stop that's based on a arbitrary point value, but it has no relationship at all to the pattern of the index as you're currently trading it. So the first thing I will do, and we were talking about this in the master class, but the first thing I'm going to do is I'm going to check for a fractal. And I'm going to most likely use the fractal to place my stop. Now I've incorporated the pattern of the stock, or of the index, and I'm going to use the fractal to place a protective stop and something that is outside of that fractal to give it a little bit of room to move. But the one thing I do not want to have happen is if I'm short, like NQ is telling me to be short right now, if I'm short and the index is starting to move against me, I want to let it move a reasonable amount unless the pattern is reversing. As long as the pattern is telling me to stay short, I don't want to get stopped out of that trade. The most frustrating thing about trading is if I'm short on an index, on a trade, and I get stopped out, but there's nothing on the chart that's telling me I should have taken that trade off. So if you use an arbitrary point value as your stop, you're not really paying attention to the chart. You're deviating from the pattern of the chart. Fractals are a great way to incorporate the current pattern and activity into your stop placement.
I'll tell you something else, Mark, that I told a client a couple of days ago, I believe, that they asked the same question. So you can answer the question yourself by just saying, okay, I'm going to take this trade, sim trade it, just write it on a piece of paper or do it in your sim count. When the cycle finder reverses, close it and see what you got. Because most of the time you're going to have a drawdown, but you won't have a huge drawdown. I'm not saying it won't happen. It can happen because it can gap up and be up 80 points tomorrow. Then you said, well, you said, but no. Most of the time, when the reversal starts and the cycle finder starts and it crosses, you close it anyway. So I've never seen a huge drawdown on that personally. I haven't, but now I don't watch it like a hawk. But still, I mean, I just think that's a peace of mind knowing that, hey, I know I'm going to get out when it crosses back, or when it reverses. And so it's either going to be 4, 3, sometimes it's 50, sometimes half a point sometimes.
When you that's a very important point, Michael. When you're trading the Cycle Finder Plus as your primary indicator, here's an example right here. At 7:42 this evening, there's a signal to go short on the 3-minute. Now we don't have confirmation, so I'm not talking about that. But here's a signal to go short. The index traded at the open of that bar 91.89. Then at 7:48, we need to take that trade off because it's reversed. So the open of our entrance was 91.89, and the open of the bar that we need to take it off is 91.9250. Yeah, we lost 3.5 points. That is and should be a very, very manageable drawdown for any futures trader. But it's not 30 points. It's not some huge drawdown. And that's one of the designs of the Cycle Finder Plus is it's going to reverse you out of the trade before you have a huge drawdown.
And there's no guarantee. What I'm about to say, there's no guarantee whatsoever. But a high percentage chance that if you do get stopped out 2 or 3 times in a row for a couple of points here or a point there, I promise you it's coming. And unless we have a sideways day, that's just the way it is. But you're going to come back where you're going to gain that back and more if you follow it. If you don't get stubborn and don't say, "Oh, I think it's going to." I think that's the problem you make right there. Don't think. You can't think. You got to follow that chart. No matter what the chart says, follow it. Don't think by whatever you've done in the past. Doesn't matter. Just watch that Cycle Finder Plus, and it'll keep you out of trouble. That's just my opinion.
Yeah, no, I think that's spot on. Use the tools that you have. Don't use what you assume.
That's
We
right.
like to trade. Aaron said this a couple of weeks ago. We want to trade based on data. We don't want to trade based on emotions.
100%. I'm a former pilot. When I'm shooting the approach into an airport where it's overcast at 300 feet, I'm not thinking I know where I'm at. I'm watching that instrument in front of me. I know where I'm at. So same thing here. It relates to flying. Follow the chart. Follow the instrument that you have in front of you. That you'll win the game eventually. Of course, it's a different airplane. You're gonna lose your life and whoever's in the plane with you. But still, you have to trust it. That's the hardest thing to do. Is trust it.
I'm gonna I'm going to retell a story that some people might have heard, but not everybody. And I think you heard this, Michael, but a friend of mine was a Navy fighter pilot. And when he was learning, he was still in his learning phase, he was doing his first landing on an aircraft carrier. And he talks about how he's coming in for his landing, and they used to make you go up, he said, and you're nervous anyway. They used to make you go up and they want you to fly for an hour or so. They don't want you to just take off, come back in for your landing, because you're kind of mentally prepared for that. They want you to fly a lot around and worry, maybe worry a little bit about it. He's coming in for a landing and he developed vertigo. And if he relied on his instruments, he was going to be okay. And the way he tells his story is just incredible. If he trusted the way he felt, like you just said, Michael, what you think or what you feel, he would have adjusted his approach to a point where he probably would have crashed onto the deck of the aircraft carrier, because he was thinking that he was not coming in level, but his instruments were telling him that he was coming in level. So he trusted his instruments and he landed perfectly. And it was just the strangest sensation to him to believe these instruments, but he'd been through intensive training. Trust your instruments. He came in, he landed perfectly well, and he was treated for his vertigo. But we frequently in trading lean towards our vertigo. It's an emotional state. Well, we've got the jobs report coming out. Well, this is going to happen because missiles are flying around. Well, there's an impeachment process. Well, so-and-so, said such and such, and so this is going to happen. You just need to shed all of that from your trading decisions, and you need to trust your signals. And if you don't feel like you can trust your signals in the midst of some sort of financial media turmoil, then stop trading and wait until things have quieted down. But the minute you try to start incorporating all of those other factors into your trading, I think you're going to lose. Financial media is always behind the game and is not going to tell you, it's not going to provide information to you that is going to allow you to win. They're always reporting after the fact. Your technical signals are giving you an idea of what the strength of the current cycle or trend is and where that trend may be going.
I was just watching the NASDAQ, and I was about to ask, and then Greg just sent a message. He made 4 3/4 points on that NQ short right there. You've got your cursor on.
That's fantastic, Greg.
Yeah. And Jasper also asked about options, where stops are, but to me, it's the same thing. If you're trading an option just based off of the chart, chart reverse, you take it off. I mean, to me, that's what I think. But
yeah. So for the research that we did, that's embedded in the PSSM, we did not factor in stops. Now, that might not make you comfortable, and you can certainly inject your own trader variable into that, but we did not use stops. We either were out on the move based on the sweet spot and delta, or we were out on a reversal. And there are some trades that, they gapped overnight unfavorably against us, and there was reversal. You just have to take that as a loss, because the minute you start factoring in other things that were not included in the data, all of the data changes. You don't know what the outcome is. So if you look at the data and go, well, I want to avoid whatever my biggest loss was. Here on SPX, the biggest loss was a 78-point loss, 78-point reversal. Now, if you're trading a 40 delta, that's a $31 loss. Well, you start adjusting because you want to eliminate that. Well, go ahead. But then you've got to go back and redo all of the data. What we're presenting to you here is something that is allowing you to achieve success over the course of a long period of time. 69 trades with a 70% of the time win at 18 points of movement. You're going to have some losses, and you're going to have some bigger losses, but you're also going to have several long periods of time where you've got just nothing but wins, and then you're going to stumble on a couple of losses. You just have to work your way through that. When you have a 70% win rate, you're going to have a 30% loss rate. So if that's uncomfortable for you, make it 80%. Make it 90%. Look for a 9-point move in the underlying stock. and now overall you've got a 90% win rate, you're going to lose 6 times over the course of a year based on the historical data. This is why the PSSM is so powerful for you, is you can adjust that to whatever you want.
And I'm going to say it because it doesn't matter, Mark. Oh God, what's he going to say? But talking about the percentage, Mark, you know, that you said the desired percentage, what you want, it all goes back. I'm going to read back to flying again. You miss the approach the first time, you try the second time, the third time, there's an 80% chance you're not going to make it. That's fact. I got a friend of mine who works for FAA. Don't go 3 times. So basically stay with what you got there and do it and just follow it like a robot, and then you'll be fine. But you just got, you just got to be careful. And especially I was thinking as Mark was talking, you can tell somebody, well, they said they don't use stops. Well, no, that's not true. That's not true. We do use a stop, but we use the chart to tell us to get out. We don't set a predefined stop. I mean, Mark puts a stop up like I do. I put it 20, 30 points out because I never know what's going to happen in this world. Nobody knows. So you can have a gap of 30, 40, 50 points in a heartbeat, and then so bottom line is we do use stops, but we just don't use them like maybe you've been taught before, because we let the chart tell us when to get out. No predetermined stop that I'm going to put my stop at every single time at 4 points. I had this same discussion this afternoon with another client on the phone. He said, why do we do that? I said, because you don't want to put a predefined, okay, everything's 4 points, because it's different every time when you get in a trade. It all depends on what the chart looks like. If you follow the chart, you'll never get in trouble. You'll get in trouble, but you won't get just devastated by the stop reversing on you.
Well, no, I think you were right first time. You won't get into trouble. You will have losses.
Yes.
But you won't get into trouble because you're following the chart. And this has been something that we have refined over the last several months, folks. So we used to use predefined stops. 10 points was a very common stop for us to use on NQ. 3 points was a very common stop for us to use on RTY. But as we evolved our data and analysis, it became very apparent to us that it's the data analysis that is more important than a predetermined stop. A predefined preset point value of a stop that has no relevance whatsoever to the current action in the index is saying I'm going to follow the chart and then ignoring the chart because it hits your stop. So that's our definition of using and not using a stop. And then you've got to insert your own trader variable and decide what you're comfortable with and what you're not comfortable with.
Mark, I think that's all the questions.
Okay. All right, folks. Well, thank you for being here. Really appreciate it. Appreciate all of you being part of our community. And Michael, appreciate you being here.
No problem.
Helping out. And we will be in the live trading room opening tomorrow at 8:45 a.m. We're going to be reviewing pre-market activity on stocks that we have positions on. We'll be taking a look at our watch list of 4 stocks and 2 indexes to see if anything we don't currently hold might be setting up for a possible entry. We'll be adjusting GTCs if we see that that's appropriate on positions that we hold. And there you go. That's what we're going to be, and we'll also be looking at futures opportunities in that 45 minutes. So thank you for being here, everybody. Really appreciate it. And then those of you that are part of the masterclass, don't forget we have session 4 tomorrow evening at 7 p.m. Eastern.
All right. Good night, folks.